Thank you very much. And good morning, everybody. I am very happy to be with you. It's the second time. 2 years ago, I was already a speaker at the same conference, but with another topic. So this is new, no worries. I will not repeat what I said 2 years ago. Today, I will cover a topic. The title is a bit long. It's called Multinational, Fostering the Growth of the Tech Startups and the Challenges of Nowadays World. So what does it mean? It means that the world is changing, and I will show you 3 major changes which are happening now. And big corporations have a very big role to play in the future and the changes of the ecosystem. The ecosystem, it's made of large companies and also small companies like startups. And I will show you the role of the startups and how the large company can support the development of the startups in this new environment. So before, let me introduce myself. I have been working for IBM for more than 20 years. And before, I worked for several companies like Citibank, the United Nations, or the stock exchange in Paris. And then I joined IBM. Since I joined IBM, I worked a lot with the ecosystem, the innovation, the startups. I was in charge of several programs which are specified for the startups and the business partners. And I am in charge of Europe. So Europe is really, it's not the European Union, it's Europe, the territory. Russia is included into this territory. And I have the opportunity to work with the different ecosystem of the countries regularly. And that's very good because there are some emerging trends in some countries which are different in other countries. So today, let's start with the market trends. Yes. The market trends and the challenges. Market trends. So I have identified 3 market trends. There are others, but I wanted to focus on 3 major market trends. One is everyone to everyone economy, the E2E economy. Probably you have already heard of B2B, business to business economy, C2C, customer to customer, B2C, business to customer. So now there is, let's say, a new type of economy, which is E2E. So what does it mean, everyone to everyone? Everyone to everyone is first an economy which is orchestrated. Orchestrated means with ecosystems, with regulations, with organization, with governance. So it's not everyone doing what they want. It's really in a specific context, for example, in a specific industry. It's the organization of the ecosystem for this industry. And there are regulations, and there are, agreements between all the participants. So orchestrated. Then it's contextual. Contextual, it means that there is behind that something meaningful. I give you an example. In a healthcare, everyone to everyone economy, you can find hospitals, you can find medical doctors which work in the cities, you can find pharmaceutical companies, you can find insurance companies. So there is a context, and this context can provide value added to each other. That's the key point. So that was the second characteristic. The third one is symbiotic. Wow, what does it mean, symbiotic? Symbiotic, in that context, it means that all the ecosystem, the partners from this ecosystem, will work together to reach the same point. For example, they are able to design some new application all together using design thinking, for example, methodology, using agile methodology for developments, but they will do some co-creation, co-development, co-marketing. So they will do it together. That's the difference. They don't work in a standalone mode. They work in a co-creation mode, symbiotic mode. And the fourth one is cognitive. Cognitive, in the E2E economy, it means that the ecosystem is able to leverage all the cognitive tools which are now available. Cognitive tools, it's artificial intelligence. It includes visual recognition, speech-to-text, text-to-speech, the data analysis, prediction, machine learning, deep learning, and all that stuff. So this is the landscape of the E2E economy. First trend. Second one, cloud. And not everything in cloud, but hybrid cloud. You are all aware that we have public clouds. There are public clouds from Amazon, from Google, from IBM, and other public clouds. So there are public clouds. Within a public cloud, you can have a dedicated part, a dedicated cloud. So it means that you have your own servers which are in a public cloud. You probably all know that, so I will not develop. And then there is private cloud. So you have your own cloud in your own company with your own servers. Typically, that's the situation of banks. Banks, you know, they have a lot of servers. They have been in, let's say, IT space for years. They have data centers. They will not get rid of their data centers and their cloud. So the best way for them is to build their own cloud and to use for other applications, mobile applications, for example, either a dedicated cloud or a public cloud. That's their choice. At the end, what they want, what the customer wants for large companies, they want to mix private, dedicated, public. They want to use a real hybrid cloud, and they want to be able to move the workload from one cloud to another cloud. So that's really the trend. And in terms of, let's say, in terms of business, banks and all the large companies, they are following this type of model. That was the second trend. Third trend, the cognitive enterprise. So what does it mean? I try to summarize the cognitive enterprise into layers. So I start with the bottom layers. So we are at the bottom layer. Bottom layer, it's hybrid cloud, more or less. It's the cloud infrastructure, hybrid cloud, plus the security you put on the infrastructure. So that's the bottom. Then let's move on and go to another layer. The second layer is more related to data. So you have the data layer, licensed data, proprietary data, public data. So you have the data layer. And what is the change since the change which has been made for the last, let's say, the last 6 years, the last 7 years? It's the quantity of data. There are a huge amount of data now available. Private data, let's keep the example of a bank. They have their own legacy system with a lot of data related to their customers and the transactions. Okay, you know that. There are some public data. If you realize what the amount of data which every day is created or goes through something like Google or something like Facebook or something like Twitter, that's huge, huge. So let's call them public data. And then there are licensed data, like, for example, data related to the weather. You license the data because this company is interested in knowing the weather forecast. They will save money or they will act differently according to the weather. If it rains, they will do it or not. So that's licensed data. So data, a lot of data, so that's a big change. Those data, well, the value of those data is to be able to predict some information. And it goes to the upper layer, so the layer starting with artificial intelligence. Typically, you will use those data with algorithm to do some prediction, some analysis, some forecast, and all that stuff. You will, for example, in the case of a bank, categorize your customers, and according to the type of customer, you are able to say, okay, this customer belongs to this category, so more or less they should buy this type of product. So it's a better tailoring of the customers. So you will do a lot of stuff with artificial intelligence. With blockchain, I will give you a longer examples with blockchain. Blockchain will provide trust, security of the transaction. That's the point. But trust is the most important word linked to blockchain. Automation, that's the automation of the processes. For example, there are banks online. You don't need to go to a branch. You go online, and then you create your account, and you have a new account. That's automation. Internet of Things. Internet of Things. There are more and more captors, sensors everywhere. They give you information. If you take a car, the new cars, like Mercedes cars, BMW, I don't know what is the most popular here. But this type of car, they have more than 200 sensors. It gives you information. You, when I say you, it's not only the driver. It gives the driver some information about the temperature of the tires, the information about the engine, the information about the brakes, and all that stuff. But it will also give information to let's put it, to the company car. For example, BMW, they will know which type of how you use your car, and what are the weak points of the car, or, well, according to the way you drive. Some people drive very slowly, some others are more active, and according to that, the tires will need to be changed quicker, for example. So they are able to make a connection between the way you drive and the consumption of the tires. That's an example of what they do. Then they can transfer some information to the insurance company. That's another story. And your insurance payment can be linked to the way you drive. If you are responsible for several accidents, for example, you will pay much more. If you do not follow the road signs, same, maybe you will be tagged as a dangerous driver, and your insurance company, even if you do not have any accident, will ask you to pay more for the insurance. So that's Internet of Things. That's an example of the use of Internet of Things. There are many others. 5G is just a question of connection and how quick the connection is. And what is now the upper layer? What is the purpose of all that stuff? The purpose is what we call automation into business processes, and it will go to something called business platform and industry platform. I will use the two words, business platform, industry platforms. It's the same. It's just because in the literature you can find business platform sometimes, industry platform in some other cases. So, this new type of trend, we saw everyone to everyone. We saw the cloud, the hybrid cloud, and the third one, the cognitive enterprise, will lead to the industry platform. That's really important, because that's the focus of this presentation. And I will show you how the industry platform will help the ecosystem, and the startups, and the business partners. I will take two examples, two concrete examples. One is with Orange Bank, so it's the story of a bank. And the second one is trade lanes, it's shipment, container shipment. So two different examples. Let's start with Orange Bank. Orange Bank, it's a French bank. It's a small bank, it's not a big bank. It has been created in 2017, so it's a very recent bank. The key differentiator of this bank is that it has been created by a telco company. Maybe you have heard of Orange Telecom? Yes? Raise your hand. Yeah, okay. Orange Telecom is the first telco operator in France. Big company. And well, they say we are in the telco business, so now we would like to move to the financial business and to the banking business. But they didn't want to install branches like Sberbank. I saw many, many branches of Sberbank. You know, when I arrived in St. Petersburg, there are signs everywhere. So there are many branches. That's the traditional banks, like BNP in France or Crédit Agricole. That's the traditional bank. They didn't want to set up branches because it's a huge investment. But they were very strong in mobile phone and telecommunication, but mobile. So they say, we want to create a bank for the mobile phones and for the new generations using mobile phones. Of course, this bank is not for my grandmother, but this bank is for my children. It's also for me, but for my children. So that was, you know, the idea of the creation of this bank. Created in 2017 with 700 employees. And what do? They based their bank on an ecosystem of partners. So instead of saying, I need a core system, banking core system, that's huge, that's very expensive, then you need a front office. You need a back office, you need a front office, you need a customer analysis and management system. Instead of creating all that stuff internally, they decided to partner with the best companies in, I would say, in Europe, providing those services. They created their bank only with an ecosystem and not with internal applications and internal data centers and internal infrastructure. That's really new, this way of creating a new business. The result of that, it's not exhaustive. I put a certain number of the key business partners which are part of their ecosystem. But you can see, for example, at the top, one is in charge of the front end. It's called Backbase. The second one is in charge of performance financial management. The third one, SAP Core Banking Platform. SAP is well known in the world, in the banking world. IBM Watson was there for the customer experience and the insight, data analysis. Salesforce for sales, marketing, customer relationship management. QuickSign for digital onboarding. Digital onboarding, it's when you take the application and you create your account on your mobile phone. That's the digital onboarding. So you can see that this is the ecosystem of Orange Bank. So they created, for this ecosystem, you need to have a platform. Otherwise, you won't be able to exchange messages. So it's a platform made of API, made of, let's say, standards information and data available for the ecosystem. Something important for startup, Orange Bank created an Orange Ventures. So it means that they are ready to invest on startups when the startup provides a new service. They are ready to onboard new startups on their platform. That's the key point. I decided to make the focus on one QuickSign, because QuickSign is a new company. QuickSign was created in 2010. It's a startup. They have only 200 employees, so it's not a big company. And they are really the leader of the digital onboarding. They are very famous. They are famous in France. They have the market in Germany, and they try to expand in other countries in Europe. But they are not working, Orange Bank is not working only with big companies like Salesforce. Salesforce is a big company, like IBM, which is a big company. They are also working with some fintech, small companies, startups, which are able to provide new services. So, behind the platform, that's an example of what a platform means. So I will not detail that. That's not the point. I just want to show you that it's this one, I think. Yes, this one. There is a customer ecosystem. There is a partner ecosystem. There is a bank ecosystem. So, more or less, there are stakeholders, and those stakeholders are connected in different ways, but they are connected. That's the key point. Another way to represent the platform, the industry platform. On the left, the market drivers. In the case of banking, there are very important market drivers. Competition. Competition, a telco company started a banking business. Retailers, they also start banking business. So the banks are with a lot of competitors which are not traditional competitors. There are regulations. Regulations, I put 3, Basel III, PSD2 and GDPR. GDPR is for private data. So that there are strong regulations. Same for insurance, same for healthcare. There are some market trends. Young people want to be digital. They don't want to go to the branches. That's a market trend. And something very important is trust and compliance in the case of this type of industry. So that's the market trends. Then there are some technology forces in the middle. Technology forces like artificial intelligence, like blockchain, like robotic and automation, cloud and security. So that's the technology forces. And at the end, what do we have? We have new business models. We have technology platforms, workflow platforms, and business industry platforms. So what Orange did, they did a workflow platform and a business platform. So they are at that level. I put this announcement because this announcement is the technology platform. That's another example. I will not detail the example. It's an agreement between an American bank and IBM for the first cloud banking platform. So that's a technology platform, but with all, let's say, all the compliance necessary for banks. So the banks can connect and use this platform, and all the ecosystem of the banks can do the same. So that was an announcement on November the 6th. It's very new. So you can check in the press. Let's move to the second example, because I still have only 5 minutes. The second example is very different. TradeLens. TradeLens is a shipment platform for containers. And you can see that it's a port, and there are containers, and there are a lot of stakeholders when you do international shipment. TradeLens, it's a platform. It's an open platform. You can Google it, and I put all the links in my presentation, so you can check. You could join TradeLens if you were in that business, no problem. You want to create a shipment company, you can join TradeLens. TradeLens was created by IBM and Merck. Merck, it's a Danish company. You can see Merck on the containers, so it's a big one. There are several, but Merck is a big one, based in Denmark. And IBM and Merck decided to create a joint platform open to everyone doing that type of business, so open to the ecosystem. It's a neutral platform. It means that even Merck competitors can join the platform. And CMA-CGM, that's another competitor, will join the platform, for example, or has joined the platform. It's driving true information. So I will insist on the true information. Because we are talking about shipment, we are talking about invoice, we are talking about customs. So we need to be sure that the information is true and not changed. It's really true information. It's why we use blockchain. And spurring innovation, because there is a platform. All the API are available, REST API. And all new services could be connected through those API. That's something very easy. The platform is based on open standards, API, interoperability, and blockchain. Blockchain, each time we will create smart contract, and the smart contract will, let's say, follow the chain. It's a private chain, of course, it's not a public chain. It's a private chain, and there is, let's say, a sort of certification each time. You know the principles of blockchain. So when there is a record, you will put the next information on the on top of the first record or another record. You cannot change the data which are below the record. And so it will secure the information and it will provide true information. That's the example of the ecosystem and the platform. So the ecosystem, you can see that there are customs, there are ports, there are carriers, there are freight forwarders, there are financial insurance services, authorities, supply chain, trade. So a lot of stakeholders. That's the ecosystem. I wanted to show you a bit more on the way the platform is constructed. So there is a first layer, a network of customers, network of freight forwarders, and so on. Then there is a platform, and there are application services. Let's move on. Application services, because I would like to focus on application services, and I would like to focus mostly on application marketplace and how ISVs, so independent software vendors or business partners or startups, that's same type of names, can provide their services. I took the examples of Agility. Agility is one of the third party, and they are part of this platform and this ecosystem. They have 26,000 employees, so it's a big company. They have created Agility Ventures, so they are ready to invest in other startups. And thanks to this platform, they could expand their business in many countries. So they move from 60, 70 countries to 100 countries, and they can expand much more because everything is standardized. So that's the example of TradeLens. I like the example of TradeLens. That's a very good one in terms of ecosystem and platform. Just a recap, how companies, large companies can help startups and business partners. They can help startups with ventures. We saw Orange Ventures and Agility Ventures. In IBM, for example, there is a program, a specific program for startups, specific program for new business partners. So specific programs, to summarize, it means cloud credits for the creation of proof of concept or minimum viable products. It means co-marketing most of the time. It means technical support. And it means meetings or opening with customers. So sometimes there are meetings on a specific topic, security, for example, with 5 customers of IBM and 5 startups. And they will, it's like they will dating, or they will meet each other for an afternoon, and it's the opportunity for the startups to present their solution and to meet potential customers. So that's an example of programs run by large companies, in addition to ventures. My conclusion, so don't be stressed in terms of time. My conclusion. In conclusion, I would like to stress that the big change is that we are moving from a chess game to a Go game. Chess, there is a winner and a loser. And the winner is the one who has the king. So that was, and that's still a model which is still existing, but still a model which is moving to the Go. In terms of winner, large companies cannot win by themselves. They need to bring an ecosystem, and they need to grow their ecosystem. It's why they are moving to the Go model instead of the chess model. They are growing their ecosystem, and they need the value added provided by the startups and the business partners. Thank you very much.
Thank you very much. So we are a little bit out of time, but you can continue the discussion in the hall over here, just around the corner. So thank you, and please, colleagues, don't forget to vote for the speeches, for the presentations. The link, and there are some links in a hall, so you can see how to access the voting page of the
If you want me to come next year, yes, please vote for me. Thanks.
Thank you.